Have you ever seen a company's name in the headlines with the words goes public and just wondered, what does that really mean? Well, it's a massive milestone. And today, we're going to pull back the curtain on the initial public offering, or IPO, to show you exactly how it all goes down step by step. Right. So when a private company decides to list its shares on a stock exchange for the very first time, it's definitely not as simple as just flipping a switch. It's actually a pretty complex and, honestly, a fascinating process. So let's dive right into what's happening behind the scenes. Okay, so first things first, let's get a really crystal clear definition of what we're even talking about when we say IPO. At its core, an initial public offering is, well, exactly what it sounds like. It is the very first, one-time only event where a privately held company opens its doors and offers up shares of its ownership for pretty much anyone to buy. You know, a good way to think of it is like this. A private company is kind of like a private estate, right? It's owned by a small group, founders, employees, maybe some early investors. An IPO is the moment that estate opens its gates to become a public museum, where anyone can buy a ticket, or in this case, a share, and own their own little piece of it. And this isn't some obscure financial thing either. I mean, every single massive public company you can think of, from the tech giants we use every day to the huge manufacturers that have been around forever, they all had their own IPO day. It's a rite of passage for businesses trying to make it to the big leagues. So that brings us to a really crucial question. If a company is already doing great as a private business, why go through all the massive effort of an IPO? What's the real motivation here? Well, it usually boils down to a few key reasons. First, and this is the big one, it's to raise a ton of cash for huge projects, like expanding the business or funding some groundbreaking research. It's also a major boost to the company's public profile and its credibility. And, of course, it gives the early insiders, like the founders and venture capitalists, a way to finally sell their shares and get a return on their investment. But it is a classic case of, with great power comes great responsibility. On the one hand, yeah, you get access to a flood of capital, a higher profile, and it's easier to attract top talent. But on the other side of the coin, the IPO process is incredibly expensive. And once you're public, you're hit with strict regulations, a total loss of financial privacy, and constant pressure from shareholders to deliver results every single quarter. Okay, so with all those pros and cons in mind, let's get to the main event, the actual mechanics of how a company goes from being this private entity to having its stock traded out there on the open market. The path to going public can really be broken down into 5 major milestones. It all starts with hiring the experts, then it moves through this whole gauntlet of regulatory filings and marketing, and it all culminates in the stock's big debut on an exchange. So let's take a closer look at each one of those steps. So, the very first call a company is going to make is to investment banks. These banks act as the underwriters, which is really just a fancy way of saying they are the architects and project managers for the whole IPO. They guide the company, they handle the mountain of paperwork, and they connect them with potential investors. Next up is the paperwork, and it is a beast. The company and its underwriters put together this massive document called a prospectus. And this thing is basically the company's entire life story in excruciating detail. We're talking financials, business strategy, risks, you name it. It then gets filed with regulatory bodies like the Securities and Exchange Commission, the SEC, for their approval. With all that paperwork filed, it's time to hit the road and generate some buzz. This part is called the Roadshow. It's basically a high-stakes marketing tour where the company's top executives go around and pitch their stock to big institutional investors, you know, like pension funds and mutual funds, to see how much interest there is and build demand before the big day. And all that feedback from the roadshow leads to one of the most critical moments, setting the price. Right before the IPO, based on the demand they saw, the company and its bankers set the official initial offering price per share. It's a really delicate balance. Price it too high and it might not sell. Price it too low, and you're leaving a lot of money on the table. And finally, the big day arrives, IPO day. The company's stock kicker goes live on an exchange like the New York Stock Exchange or NASDAQ. The opening bell rings, and for the very first time, anyone with a brokerage account can buy and sell shares of the company. From that point on, the price is driven entirely by market supply and demand. Now, there's one really important rule here to prevent total chaos on that first day. To stop a sudden flood of shares from hitting the market, insiders, like employees and early investors, are usually subject to what's called a lock-up period.
This legally prevents them from selling their shares for a set amount of time, usually about 3 to 6 months after the IPO, just to ensure a more stable start.
But, going public isn't the finish line, not even close. In many ways, it's just the start of a whole new race. So, what is life like for a company after the IPO? Well, that first day, and honestly, the first few weeks, can be a wild ride. There's this frenzy of excitement and speculation, and the stock price can swing pretty dramatically as the public market tries to figure out what it thinks the company is truly worth. And from that day forward, the company is basically operating under a microscope. It faces constant scrutiny from market analysts and the public, and it's now legally required to publish detailed financial reports every single quarter, meaning a whole host of strict regulatory demands.
So when you boil it all down, an IPO is so much more than just a financial transaction. It's really this transformative bridge that connects a company's private innovation and all its hard work with the vast capital and visibility of the public markets.
And there you have it. From a private idea all the way to a publicly traded stock, now you know exactly what an IPO is and the incredible process a company has to go through to make it happen. Learn, invest, repeat. Investing made understandable.